Hey, everybody, welcome back. So this is the weekend presentation about home prices still rising, but the pace of pended homes or sold homes basically still waning. This is version 2.0 because, well, I guess YouTube and I didn't agree on audio, so I didn't have any audio. So here we go. We're going to do this again. We're going to do this before I kick off to the office to meet with some folks. And this is actually, well, it's always fun to do the videos. And because I have no script, it makes it even easier. So here we go. The question is, if home prices are still going up a little bit, not up, but more flatter, if interest rates are down and we have still a lot of buyers out there, what's going on with the market? How come we're not seeing more sales, or are we? Let's get into that. Let's talk about our weekly metrics so you can make the best business decision for you and your family. Let's get the show on the road. All right, so here we go. A lot of folks are asking, hey, is this now the time to put my home on the market? Hey, is this now a good time to buy? And the answer to both of those is yes, because really all of the planets are aligning. And when we take a look at this, it says, hey, listen, home price is still on the rise, but pace remains subdued. This is a national level, right? So as we see the chart here, both on the Case-Shiller and the FHFA chart, of course, we see the 2020 spike up above, but then you see that we also had a late 24-25 kind of pullback on the market, and then we started to see some of that recovery. And in fact, look, year over year, fourth quarter was 1.8% above, albeit it was only 0.8 when you compare the two quarters together. But appreciation has recovered from early 2025 dip and is back in a normal pre-pandemic range. And that's important to understand. You see, everybody keeps talking about, hey, our inventory's going up, our inventory's going up. And the answer to that is yes. And the answer to that is absolutely, we need it, because during the pandemic times between 2020 to basically end of 2022, first part of 2023, before the mortgage rates went up because the Fed stopped buying mortgage-backed securities, our inventory had dropped to historic lows that I, in my 33 years of practice, had never ever seen. And that is absolutely insane. So to actually start to hit part of that recovery is important because it gives more buyers options. That resale market is absolutely critical so that people can have things to look at. Now, for the builders, that's probably the worst news for the builders, because they want scarcity of resale inventory so the eyeballs are on their projects. And so they have been suffering since basically mid-2023 because the inventory for resale inventory has been increasing, which is awesome. Now, if we come back and we take a look at some of our headlines. So bottom left, since the top right is, or top left, which is what we are talking about, mortgage demand calms before the storm. And you might be asking, George, what do you mean by that? Okay, so since Friday, we actually came not only down into the high fives, okay, as predicted, but it actually stayed there. It didn't just go whoop like that, like the first one. So the refinances have absolutely been going off the chart. Why? Because the people who missed it the first time are definitely capturing this time. Now, if you're like, oh, George, dude, man, I'm already under contract. I locked my rate. Don't worry about it. What you need to look at is, what would that first buy down look like? Because many times it's now going to be a lot cheaper. And since you haven't closed yet, that still gives you that opportunity to get an even better rate. And a lot of folks say, George, you talk about refinance. At what point does it make sense to refinance? Normally, if you have a 1% gap, so if you were at the 7% and now you're at 6%, that makes sense to do a refinance. 0.75%, it's marginal. It depends on how long you've been in the mortgage, because sometimes, well, it doesn't make sense. So if you're going to consider that, use the mortgage calculator. It's free. There's no login. Just go take a look at it and you can run some numbers. Make sure you watch the video on 5 questions to ask when getting quoted rate. A client of ours almost got caught in a $14,000 upsell to buy the rate down. They did not know it until we started asking the questions they should have asked. And then they're like, dude, that doesn't make sense. I'm like, totally agree. It had like a 5-year repayment. That didn't make sense. So in that regard, make sure you're watching that video. It just helps you to make a good business decision. All right, let's keep going. Upper right, look at that, 5.99, and it stayed there, and that is super important. The fact that it is hanging and lingering, and you can see that downward trend, is super awesome. But how long will it stay there? Well, I am sure this week it'll pop back up again. It just all depends on some of the confidence and what's going on in the market. Bottom right, best week for mortgage rates in years. Basically, the last 3.5 years, these are the best rates that we have seen since then, both in cost or what we call pricing. Make sure you're asking for par pricing when you're asking for rates, and same time of day. As we kind of continue here and we take a look at, for Freddie Mac, we talk about rate and what's going on. So today over last year at this time, super cool part, look, we're 0.78. We're over 3/4 of a point less than where we were at this time last year. That is massive, okay? And the reason that is massive is that all of those folks now are able to qualify for that next step up. A full point difference is a big deal when it's amortized out. So if you were looking at a home at, let's say, 1.1, you can easily bump up to 1.2, 1.25, and keep a very similar price point, depending on credit and things like that, time of loan. You could absolutely bump up and be able to hit that next target market if you want to, or save those dollars in your pocket if you're still considering that same price point. So keep that in mind. There's a lot of different options that are out there. Now, the other thing, let's talk about days on market. What is our market doing? So we're at 12 days more on average to sell a home. We were at 21 days, but we have now brought that down to 12. With that, we have actually increased the the list to sales price. That is super important because we were about 2.5% below, meaning that if I sell at $100,000 and I have $100,000 or a 100% list to sales price, then I would list at $100,000, sell at $100,000. We were down at 96. We actually dipped down to 95, popped back up to 96. Meaning if I list at 100, I'm selling at 96,000. Now we're at 97,000, and we are starting to close that gap as we are getting better pricing, sellers making better decisions, and buyers with the ability to purchase more are able to stretch a little bit further. Now, as we take a look at it, that's a big deal because even year over year, our numbers are improving. But if we take a look at the average 7-day average for looking at what came on, 871 homes came on market. However, look at this, 1,045 went pending. And so what that means is for every home that's coming on the market right now, 1.2 homes are going off the market. And that is, again, a positive trend. So for us, we're bucking that national trend because even our pricing, even though we're down a little bit year over year with the average sold price, we're still heading in a more positive direction. And you might say, how is that possible? Because as we track each one of the months, are we improving over the last month, the prior quarter? Are we continuing to improve? And the answer is yes, and we'll see that here momentarily. So as we pop over, super important. Hey, listen, like the video. There's no marketing. The key is to get people really solid information. And if you want, go ahead and subscribe. We'd love to get you guys alerted each week. When we talk about the Northwest MLS and the numbers and what we're doing and what does that look like, right? And let's blow this chart up for you. Here it is, top chart. So even though we were off year to date, 384 homes, and remember, that is also 3/4 of Washington State. We are up 870 pended homes. Now, the super important part about this, remember, when we talk about the sold homes, that was last month, right? So if this is now officially March, that means that the February numbers, we're seeing January pended, January closings, okay? We will see February pended, February closings in March. So everything is always lagging. Your pended is a dynamic number and a super important metric to watch, just like we watch homes coming on market, because that tells us and shows us our trend. How close are they? You're going to see here that every single week, and you'll see that in a moment. When we take a look at the green chart down below. All right, so we're off 131 homes in February alone. However, we had 731 more pended, or up 18.3%. So what does that mean? Look, when we know that our sales price is up 2,000 over last week, 4,000 year to date over last week, even though we're about $22,000 off of the average sales price, not your home value, sales price, this is what it runs down to. Sales are down slightly by 5.4%. Pended are up almost double that at 11%. Average time on market, it's 13 days, 12 days, 13 days. It used to be 21. We're seeing those number of days coming down. Average sales price is lower by 2.2%, but it is also higher than it was week over week by $4,000. Mortgage rates, the lowest in 3.5 years. Let's jump over to new construction. Now, is new construction still a great value? And the answer is yes, it is. There are still a lot of incentives out there, especially if you look at what we call standing product right now. There's a lot of motivation to get that inventory, to get those homes off the books and get them into the pended column. And make sure you're working with an agent who knows how to negotiate that. The site agent, look, they work for the builder. Their goal, and they get bonuses on keeping as much money in the builder's pocket, not helping your pocketbook. So remember that. I'm just saying. All right. Moving on. When we take a look at it, year over year, these guys actually did a stellar job in February. Take a look at this. In fact, let's start with the green chart down below, the month over month for the month of February. Their pendeds are up 2.1%. I get it. It's only 14 homes. They were off on sales by 69 homes. Again, that's about what they've been averaging, for the last couple of years. When they talk about as far as new homes on, we had some plats open up. So we have 88 more homes. And then, of course, 323 more active buildable property, or buildable homes that are built, I should say, than what we had last year. Again, those numbers are rolling over for the benefit of buyers. Year over year, our numbers are just off just a little bit. That's the chart at the top. Not a big deal. When we take a look at it, here's the picture's worth 1,000 words. We see our sales and our asking prices heading in a positive direction, meaning they're heading up. For a buyer, that may not be positive, but there we are. So the average sold is up basically 5%. When we talk about year over year, it's up just barely. It's just up slightly. Here's the thing. When we take a look at new construction, it is a good metric to watch because remember, builders forecast, right? So when we build homes, I've been building homes for 27 years as a hobby. We're forecasting out 6 months at a minimum, a year and a half, 2 years, looking at where are we going to be, what product do we want to be looking at, where are the demographics starting to shift. They've got a huge head shed and they are forecasting out. So one of the reasons we take a look at their velocity and what's coming on, what's going off, how they're pricing, that tells a lot of what their mindset is. Builder confidence right now is, it's marginal. In our area, it's good because our homes are selling. There's other nationwide areas that they are suffering. Okay, but that's not us, and we tend to be a little more insulated. We're one of the 5 sweet spots across the United States, and something to keep in mind as you're taking a look at your buying decisions and what you want to do. All right. So when we come back here, let's finish up with our bank-owned homes. Bank-owned homes, hey, listen, they're not very exciting because there's not that many of them. When we talk about, we only have a total of 40 more homes this year than last year at this time, and that, again, is not uncommon. Banks do not like to foreclose on homes, on borrowers, between November through January and sometimes February. You might say, well, why? Well, it's super simple. You see, it is better to keep that person in the home, keep the home occupied, keep the home heated, keep it maintained, and so that we don't have any damage, any broken pipes and things like that, because utilities are shut off. It just makes absolute common sense to do that. So that's why we always have a February, March uptick. Now, yes, you're going to have some politicians that are going to feed on this, and they're going to say, oh my God, it's Armageddon, everything's crazy. No, it's situation normal. Anyway, just saying. Banks, they come in, they do paint, carpet, and vinyl. They get the home back on the market, they get market value. And that is very clear here, as you can see from the metrics. Our number of homes, it's only 21, 3/4 of Washington State. That's peanuts. 14 more pended, 3 more sales. But, small numbers doubled make it look like it's a big deal. And it's really not. So if you have any questions, put it down below. We love to answer them. We normally get back to you in about 30 minutes. It's going to be an absolutely stellar week out there, having a fabulous time. If you are looking at doing some plants, now's the time to make sure you start getting those ready to go out. About mid-March, you're going to probably start to harden them to get out there. And if you need more information on that, look down below. We'll put a link for Raintree, which is a really great company. It is They're not sponsored. We do not get sponsored by them. They're a local big nursery and a great place to go. In the meantime, I'll see you on the next video. Have an absolutely fabulous day. Take care.